It's Monday, April 21st, 2025, and time for your Monday market update. Thanks so much for watching. Let's take a quick look at your McHenry County numbers for the last 7 days. We had 125 new listings, 119 under contract. This is the third week in a row that we are seeing less homes going under contract than newly listed. We had 83 closed sales, 28 price changes, 1 expired, and 56 currently on the private network. So it's something to take note of that we have a few, and now it's only by a very slight margin that we have less going under contract than newly listed. What we're seeing is a lot of people are being driven by fear in this market. We have the global tariffs that are happening, and that is scaring a lot of people, and we're seeing a lot of pullback in a lot of the different sectors of our economy, and housing is not immune to that. We also had interest rates go up last week by about 0.2%, so we're now hovering at about 6.8%. Now again, that's the rate that Fannie Mae is going to be lending at. That is not the rate that you would actually be able to get as a consumer. So people are probably looking at 7% as an average rate that they're going to qualify for. Now that's if you have great credit and low debt to income ratio, high income, all of those things. So lots of fear, economic uncertainty, we're kind of on a roller coaster ride. We're not really sure what's going to happen this year. But here's the thing that I was talking to my team about this morning. We always have things going on. There's always something. So we had COVID in 2020 and we had no idea what was going to happen. And there was a lot of fear there and a lot of pulling back. And then it ended up being the greatest thing that ever happened for the real estate industry. So we don't know what any of this is going to lead to, but you always have people who have to buy and sell real estate. You always have people who are highly motivated by life circumstances that make them want to move. So while we do have a lot of economic uncertainty and we do have interest rates that went up last week, we're still below 7%. And this is the 13th consecutive week that we've had interest rates below 7%. And this week last year, interest rates were at 7.1%. So we're still lower than we were this time last year in terms of interest rates. We also have purchase application demand is 13% lower this time last year. So we're seeing a better start to our spring market, even though we do have a lot of construction going on. We have people that are afraid to pull money out of the stock market. Obviously not a great time to do that. So people in higher price brackets might be pulling back a little bit more than the more median price bracket. We do have some job loss concerns. Obviously, anyone working for the federal government is going to be concerned about their job. So we have a lot of uncertainty happening in that aspect. We had an announcement that the Trump administration is going to be pulling back on the Section 8 housing. So that is going to largely impact rentals. We might have some people who can't afford the rent anymore and might be having to move out. So we might have more availability with rents. Maybe that will bring rental costs, monthly rent costs down. That could affect our availability there. So while it's scary and we don't know what the heck is going to happen, there also is some predictability and some comfort in knowing the fact that there's always going to be something. It's never like, hey, everything's great. Everybody wants to buy and sell a house. Let's go. That's not really the reality that we live in ever, except in 2022. And even then, think about that. When rates were at like 3%, everybody was out buying a house, right? And we would have 20 offers on a house in 2 hours. And it was a feeding frenzy. And that wasn't really very fun either. So we're seeing prices kind of leveling out. They're still going up, but they're not going up drastically. So we've got some leveling out happening there. Interest rates are fair. I know that they're not 3% and everybody wishes that they were 3%, but that's not actually a healthy economy either. So 7%, anything under there is going to be fair. We're at about 6.8 right now. It's a great rate, historically speaking. And you're always going to have people that are motivated by life events to move or buy. So if you're somebody who's thinking about selling this year, maybe you're thinking about, moving out of state. A lot of people do that around here. Just keep in mind that your home value is safe, especially in a recession. There are a lot of things leading us to believe that we will have a recession this year. GDP numbers are coming out May 15th, I believe, and those are expected to be lower or flat. And so therefore, we could see definitely some beginnings of a recessionary indicators. And if that happens, 6 of the 7 recessions we've had in the last 50 years have led to increased home prices. So your home value is safe in a recession. So if you're thinking about selling this year, you're in good shape. Prices are going to continue to go up. Demand is going to stay considering how many homes go on the market and how many buyers we have in the market, should be, about the same as they've been at about 1.5 months inventory. That's not a lot. So we'll still have a lot of demand for your home. People don't have as much money. So if you are thinking about repairs that you might need to do, you definitely want to come to our seller seminar that we have on April 30th, because we will be talking about what is the condition of the buyer and what are buyers wanting to see in your home to make sure that your home sells quickly and for the most amount of money that you possibly can get. So come to our seller seminar and we'll talk more about that. But right now, it is a very fear-driven market. We're seeing a lot of volatility, a lot of uncertainty, and that can be scary. However, just remember that if you are in the housing, if you're looking to buy a house or sell a house, just know markets are, your values are safe. So if you buy a home, it's not like it's going to drop out tomorrow, your value. And if you're looking to sell your home, your prices, what we can consider, what we can predict for right now, your value is safe and it will continue to go up throughout the year. We might have more or less buyers coming to market depending on what happens with job reports and what happens with, when the feds meet in May. Likely we will not see them do anything. They won't raise the prime rate or lower it. They're like, Jerome Powell is pretty firm that he's not going to do anything because we've got the threats of inflation, but then we've also got job loss. So we've kind of got two ends of the tug of war happening here. That's just going to keep us pretty flat. So if you have any other questions, please, as always, reach out to me. I'm at Miranda at MirandaAltTeam.com, or 815-529-0777 is my personal cell. You can call or text me there, and I'd be happy to answer any of your questions. But keep in mind, the Midwest is pretty safe. We're pretty flat. We don't go crazy. So if you're in the Midwest, it's easy going. We're going to be fine. It's all going to be okay. Thanks so much for watching. Have a great rest of your Monday. Stay warm, and the sun is supposed to come out later this week. Yay! See you soon.